The crypto world is full of noise, hype, and speculation. But every once in a while, a project comes along that sparks real conversations about innovation and impact. One of those projects is XPIN Network Coin, a rising name that's been turning heads lately for its bold vision of merging decentralized infrastructure to PIN with payment finance, what they call PayFi. The big question now is, what could be the future effect of XPIN Network Coin on both the crypto market and the global telecom industry? Let's start with what's on the horizon for XPIN. According to their roadmap and official blog updates, there are several key milestones that could shape the future of the project. One of the most anticipated is the XPIN Free Data Plan, a bold initiative set to roll out across 149 countries. If successful, this could revolutionize how users access mobile data, turning connectivity into something powered by blockchain incentives. On top of that, the integration of eSIM mining means users could earn rewards directly through their devices, merging real-world telecom usage with crypto mining. That's not just innovative, it's disruptive. Then there's a listing roadmap. XPIN has already made waves with listings on exchanges like KuCoin and WEX, but the team has hinted at more major listings on both centralized CX and decentralized DX exchanges. These listings aren't just symbolic. They increase liquidity, improve accessibility, and build the kind of trust that retail investors and institutions both look for. But one of the biggest short-term attractions is the XPIN deposit program, offering APYs of up to 400%. That's eye-catching for any investor. High-yield staking opportunities like this tend to draw attention fast, driving up token demand, especially among yield hunters. However, it's important to recognize that this kind of APY also carries risk. If token issuance grows too rapidly or the rewards outpace real adoption, inflation could creep in and destabilize the token's value. The sustainability of these rewards depends heavily on how well the ecosystem grows and how XPIN manages its tokenomics over time. Now, zooming out to the broader market, XPIN is entering the PIN sector, which has become one of the hottest narratives in crypto. Decentralized physical infrastructure networks are being seen as the bridge between blockchain and the real world, connecting users to services like data, storage, energy, and in SPIN's case, telecommunications. The PIN trend has gained serious traction in 2024 and 2025, with investors seeking real-world utility rather than speculative hype. SPIN's angle is particularly intriguing because it combines the PIN with PayFi, a concept that blends payment flexibility and connectivity under the slogan, "Buy now, pay never." If this model works, it could capture a share of the multi-billion-dollar telecom market, a space that has been ripe for disruption for decades. Still, SPIN's potential doesn't come without challenges. The telecom market is notoriously complex, and competition is fierce, not just from other crypto-based projects, but also from traditional telecom giants experimenting with Web3 integration. If XPIN can secure partnerships, scale across multiple countries, and offer better user experiences than competitors, the upside is huge. But if larger players or other PIN networks catch up technologically, XPIN could face pressure to differentiate itself faster. Then there's the regulatory side of things. SPIN's ambition to expand across 149 countries sound impressive, but it also means dealing with an enormous range of telecom and data regulations. eSIM technology, in particular, is tightly controlled in some regions, and governments may not be quick to approve decentralized or crypto-linked versions. The Project Global push will require compliance, local partnerships, and adaptive strategies to avoid setbacks. Regulatory friction has slowed down many promising blockchain projects before, and SPIN's expansion plans are no exception to that risk. Now, one major issue raised by Bridge AI's report recently can't be ignored: centralization. According to the report, around 91% of SPIN's total supply is held by just 8 wallets. That kind of concentration can trigger 2 serious concerns: potential manipulation and liquidity risk. For investors who prioritize decentralization, that's a red flag. It also opens a door to regulatory scrutiny, as concentrated holdings often invite questions about fairness, transparency, and control. If XPIN addresses this issue, perhaps by redistributing supply, burning tokens, or implementing transparent staking mechanisms, it could help rebuild confidence. On the sentiment side, the community seems divided. Many investors are bullish because of SPIN's ongoing partnerships, including one with Korean MCP, and an increasing number of exchange listings. These developments tend to boost short-term momentum and drive optimism around adoption, but others remain cautious, pointing to the same centralization data and liquidity risks mentioned earlier. On social media, the buzz around high APY and the project's innovative telecom model is strong, but crypto communities are fickle. Once confidence is shaken, sell-offs can come fast. From a technical perspective, SPIN's recent price action reflects this mixed sentiment. After a strong surge, the token has entered a correction phase. Indicators like the Relative Strength Index RSI and MACD show bearish momentum in the short term, suggesting that the token might be cooling off after a rapid rise. Meanwhile, the Fear and Greed Index across the broader crypto market sits at around 20, signaling fear. In times like these, even fundamentally strong projects can suffer from sell pressure and reduce investor appetite. When we pull all of this together, SPIN's future effect hinges on a few critical factors. First, execution. Can the team deliver on their roadmap promises like the free data plan and eSIM mining without major delays? Second, token management. Will the high APY model prove sustainable, or will it cause inflationary pressure? Third, decentralization. Can XPIN address the concerns around concentrated supply to gain investor trust? And finally, adoption. Can they successfully bring their model to telecom markets across dozens of countries while navigating local regulations? If XPIN manages to execute well on even half of these fronts, it could become one of the most influential PIN projects of the next cycle. It's not just about price. It's about creating a bridge between blockchain and real-world connectivity, something few projects have done successfully at scale. But if the team fails to meet milestones, or if token inflation and centralization issues persist, XPIN could struggle to maintain long-term value despite short-term hype. Ultimately, XPIN Network coin sits at a crossroads, one path leading to real-world adoption and potential dominance in blockchain-powered telecom, and the other toward being another overhyped project that couldn't scale its promises. For now, investors should watch how the roadmap unfolds, track community growth, and monitor how XPIN handles decentralization. The next few quarters will likely decide whether XPIN becomes a case study in blockchain innovation, or a reminder that execution, not promises, defines success in crypto.